Everybody, Dave here in Freedom Investing. In today's video, we're going to go over the importance of dividend investing, at least in my investing journey. All right, I know at the beginning of the video, the mountain climber descending, all right, going down that dividend mountain, could not make it to the top and returning back to where he started with his tail between his legs. So let's go ahead and get Doug into the video. And yes, Doug is not a real person, all right? It's like Dig Dug, okay? So let's go ahead and get Doug in. All right, so we are looking at my dividend portfolio here, and I know that the screenshot from earlier, it looked like I had sold everything, and it wasn't meant to scare anybody or anything like that. It was just this is just to kind of get you to reflect on another strategy that I actually thought about, all right? And we'll talk about that here in a bit, but I'm gonna also talk about the reasons why I'm not going that route as well, all right? So, yes, this is the dividend portfolio, $387,000 in there. It's kind of been a red week, so it's gone down a little bit, but I'm not too worried about it. And that's the great thing about dividend investing, is kind of set and forget, right? So what other strategy I'm talking about? I'm talking about options, all right? So a lot of us in a little small niche community, so kind of going around here, a lot of us have been selling cash secured puts, naked calls, strangles. Some people are starting out with covered calls as well, and I kind of highly recommend people start out with that. If you're going to dabble into options, start out with covered calls, please. So there's been times where I've been sitting, either laying in bed or just sitting at my computer, which most of the time I'm laying down, but I'm thinking about, why do I dividend invest? What am I doing here? I'm making more with options income than literally just in a couple of months or a week or two that I do the whole year dividend investing, with literally half as much in options, all right? So my net lift for options is about half the size of my dividend portfolio, even less than half the size of that dividend portfolio. I'm generating about $12,000, almost $13,000 of income with my dividend portfolio. With the options account, which is about a little less than half the size, I can generate probably double that amount. So I came up with a phrase of something called coma money, all right? So toe tags and body bags money. So if you were in a car accident for some reason, or whatever, you had a stroke, I don't know, something catastrophic happened, guess what? Your dividend portfolio is gonna just generate money for you for 10 or 20 years, 5 years, however long you're in that coma, all right? So if you look at my dividend portfolio here, let's just say I'm in a coma for 10 years. After the end of 10 years, that just can be drip, because drip's turned on, I'm gonna be generating over $43,000 just in a dividend income alone, all right? Now, if we click over here to the actual portfolio size after 10 years, it'd be about 2030 or so. It would go from $387,000 up to $684,000, okay, without me even touching it. I'm sitting there sleeping away in a coma, and that portfolio value is going up. Okay, there's a reason why that when they look at people's account with the highest returns, those are the people that have died, all right? And the second in line are the people that never even look at their portfolios, okay? I'm not talking about just dividend portfolio, I'm talking about investing in indexes and stuff like that, okay? I think the third in line is people that might look in their account maybe once a year and actually balance it or something like that. So people that die, people that never look at their account for years on end, and then people that maybe just look at it once a year and balance it, all right? That's the stacking order there, or the pecking order. So that $12,700 in coma money is gonna just get generated every single year. And matter of fact, it's gonna go up every single year. After the end of 25 years of just literally if I was in a coma for 25 years, all right, with dividend drip turned on, which is turned on right now for every one of my stocks, I'm gonna be generating over $900,000 of dividend income a year. $900,000, all right? So sitting in a coma is fruitful. In addition, at the end of those 25 years, year 2045, the portfolio would be worth $4.7 million for me not doing anything other than sleeping for 25 years, okay? All right, so that's the reason why dividend investing is important. Dividend portfolio is working for me day, night, hourly. It doesn't matter, all right? Hourly dividend income, look at that. $1.45 an hour for me not doing anything. Just sitting there, you know, eating bacon, laying in bed, dreaming about whatever I want to dream about. So what's the other option? The other option is options income. Okay, we've been talking about it for months now, right? I've done many videos on options income. You can take a look that up here, all right? And options income is another great way to supplement income with a couple of caveats, or some caveats, okay? And we're gonna talk about those. We're gonna kind of look at the behind the scenes as well on all the plays that I do and all that as well. I don't wanna get too deep into it because they are kind of complicated. But I'm going to look at a couple of strategies that I've done, you know, a lot of the plays I've done this week, how much I've made month to date. Okay, so that's December 1st, how much I made in November, how much I've made year to date, and all that. So let's go ahead and take a look at that now. All right, here is a new page I created called Options Metrics and Report. I call it the Options Report here. I just put this together. It's taken me probably 40 hours of work to put this thing together. There's a lot of calculations in the background. So some of you have taken advantage of my spreadsheets that I've made available, and in addition to that, you've also taken advantage of that discount code I put available, which goes all the way until December 25th. This is not available yet. I will be adding it in probably in the next week or two. So this is just a beta page. I'm going to consolidating the options, naked calls, the Castigar puts, and the covered calls all down to just one report to make it a little bit easier to track, in addition to make it easier to you know, just kind of reduce the tabs as well. So you will be getting that. You will get an update email when that's made available. So this is version 1.05. If you want to take advantage of that discount code, you can get in on that right now. This won't be in there, but it will be in there eventually, the next week or two, assuming I can work out some bugs and all that. And you will get that. You will get an update even if you make the purchase before then. So, all right. So what we're looking at here is options, metrics, and report. What this is actually looking at is just looking at all the options I did for the whole. Well, not really the whole year, because I've actually been doing options for the whole year, but I just started tracking them back in June. So that was the very first one I started tracking there. That was a covered call, actually. And these are all the options that I've done since then. Going forward, I've tracked every one going forward since then. And this is covered calls, this is cast-secured puts, this is naked calls, all down in one of strangles in here as well, because it's really just two legs. That's all of them just down in one page here, all right? So I've made over 190 something trades with several contracts in there, and we can see that all on the options report here. So we'll just kind of query back. Let's just go before June here. Let's just do May or April here. Even though that there is no actual records in the database, or whatever you want to call it, the tab there. So year to date, I've made over $6,900. And like I said, just since I started tracking, I've been doing options from the beginning of the year and last year. Really, I've actually been doing options for about 13 years now. But this year, I took it seriously and got really involved with it. And I kind of want to talk a little bit more about it. Why wouldn't I just dump on my dividend stocks for this, right? All right, so let's just kind of go through some of these metrics here. Average percentage probability of the money. Okay, so every one of I record that on every trade I make, all right? So every one of these trades, there's a probability of in the money, okay? So right here, this is the Microsoft, which I put on, and it's got 35 days left on a DTE. Expires on January 15th. That's actually a strangle here because I actually put on the opposite side call here. Let's see here, I think I have to scroll up for that. So there's the Microsoft other side right there. So that's a strangle actually. So it's an extreme end on the high side, extreme end on the low side there, 35 days out DTE. And the probability of the money is 5.3% on the put side, and on the call side, probability of the money is 5.7%. Okay, now some platforms don't provide probability of the money, all right? So TOS does, Interactive Brokers doesn't. So I created a tool for that. So this is a tool that I made, actually it's a CLI tool, which can generate CLI information, or it can actually generate a HTML output as well. So what we're looking at here is an Apple strangle that I put on yesterday, and that's expiration date of January 15th. and 35 days left on expiration. So what I did is I sold, let's see here, that was Apple 35 days out. So we're looking at the call side here. $1.50, so $150 strike, and that was a 5.5% probability of the money. So if we go back to the tool here, we go down to the 150s, and let's see here, 150s, what about 5.5% probability of the money? In addition, I also created a new field there called annualized rate of return, just to have it nice and conveniently right next to it. So when I'm looking at the strike price, and I obviously have a rate of return right there of 2.7%, if that was annualized rate of return. That's not very good, okay? Now that's Apple and Microsoft. Those, strategies aren't the best. 5% probability of the money is never, most likely not gonna happen. So I sold 2 contracts in each side, all right? The extreme high, the extreme lows on that strangle on both Microsoft and Apple, because that's, in my opinion, those stocks are just not gonna move that much in those 35 days. Option strategies can help supplement your dividend income. Go ahead and like and subscribe and hit that bell notification. So the average here is just an average of all of my trades I've put on. So we're looking at every single trade there, 115 trades, okay? Now this is not looking at the covered call information, because the covered calls are in my Schwab account and I'm not filtered for my Schwab account. So that's just looking at strangles, okay? That's the put side and the call side there. So 115 trades since I've been tracking it anyway. And the average percentage of probability of the money is 7.3%. Okay, so that's, everybody knows me, I'm pretty conservative on my strikes, all right? I like to be down around that 5%. And then I might get a little more riskier on some shorter DTEs as well, but average percentage of probability of the money, 7.3%. You can see that right here in this gauge, okay? So average percent of probability of the money. I'm in the green there. I think I have that set to about 10% or so. I really don't want to go above 10%. I can't exactly remember what I have that set to, but I guess we can look at the chart here. So if we look at the chart, we go to customize, we go to gauge. Let's see, okay, so I have it set to 15%. So 15%, I have the green set up for that, and maybe going all the way up to about 20% or so. Anything above that is just red. It's just way too risky. There is people that do that and they make a killing. They make a lot more money than I make, but they're also not sleeping as well at night as well, probably having ulcers as too. All right, so I've sold over $22,000 of premium, okay, 207 contracts total. Commissions, fees, $264. Okay, that's just the cost of doing business there. That's just a small drop in the bucket when you're bringing over $6,900 in profit. Okay, $264. That's nothing. All right. Total exit price. Okay, so that's basically I bought most of these all back. Didn't let them expire. All right. So average DTE is 8.7 days. Okay. Average days held is literally only 3 days. Okay, so I'm in and out of these things in 3 days. Okay, so I'm actually going to talk a little bit about making these a little bit more passive going in the future, because that is one drawback of doing with the strategy I'm doing here. So let's go look at the average profit and loss percentage there. The average profit and loss percentage is 41.8%. Okay, we have a gauge there set to that. We're almost in the green. I think 50% is the ideal number for me. I want to try to take that profits about 50%, and we're not doing too bad. We're at almost 42% with literally only a 3-day hold. So we're doing something right there. Whether that we can maintain that or not, I don't know. I think getting safer on the strikes and more conservative, I think it's doable. You can get to the 50% or higher pretty easily. Looking at the win percentage here, we got 111 winners there. Okay, the win percentage is 96.5%. So you're thinking, Dave, what about those losers right there? You got 4 freaking losers. What's going on with those? Okay, let me tell you about those losers. All right, one of those losers was me hitting the wrong button. Okay, and I actually bought a contract instead of selling it. All right, so I actually had to sell it, and I took a small loss, and it was like 10 bucks or something like that. We'll look at it here in a second as well. There's a couple other losers in there. There's 2 other losers in there, and one of the other losers is me rolling those Intel contracts. Okay, so we take a look at the options history here, and we look at October 22nd there. And I got into everybody, well, not everybody, but some people, have been watching my Intel videos and stuff. I talked about this. I sold 10 contracts, 50 strike on Intel right before earnings, like an idiot, okay? This is an idiot trade. I shouldn't have done that because I'm long 1,000 shares in another account, and I'm selling, 10 contracts. Basically, it's just a bullish position. every which way around, okay? And, you know, give me a reach around here. So we're looking at that position here, and I took a $1,700 loss in that position. Trade P&L position, trade P&L percentage minus 860%. You're thinking, Dave, I cannot handle that. That is just ridiculous. You can't, this is not sustainable, right? Okay, annualize, that's 1,200% you're down, all right? So what did I end up doing with that? Okay, and I made a video on this, all right? I rolled it. I made a video on it. If you take a look at up here, I talked about how I rolled it in Interactive Brokers, okay? And I rolled it into this one right here, all right? And we basically paid for that loss. We bought it back for $1.92, and we sold a new one at $2.28, which pays for that loss, all right? So that loss is immediately wiped out the same exact day. So October 23rd, I bought it back, and then October 23rd, I sold one for another strike, okay? I went down 50 cents in that strike, sold another one, 10 contracts, and for $2.28 per contract, which paid for this loss up here. Now you're thinking, Dave, okay, what about this $2,500 loss right there? Well, guess what? The stock continued to drop, okay? It made a 52-week low or got right near it, all right? So this particular contract was only good for 11 days. Well, it dropped, okay? It kept dropping. So guess what I had to do? I had to roll it again, okay? So what we did here is we rolled it out on November 6th, okay? So it's an 11-day hold, and I took a $2,500 loss on that one as well. So that's the reason why we have rolled out here, okay? And that was a 110% loss. And if you annualize that, it was 168% loss right there. So what do? We roll that out into this one up right here. So on November 6th, we rolled out of Intel C. All right, we rolled out of that 49.50. We rolled it into this one up here, and look at that. I actually might need to look at that date. I either look at this one or this one, but either case, I rolled it out the exact same day. So I rolled out here and then rolled in here. Okay, so I paid for, let's see, the premium was $4.78, and I rolled into a 49 strike. Okay, so that's 50 cents safer there. So I rolled it out for $4.78, and I rolled it in for $4.69. I actually need to look at that. Pretty sure I rolled it for a small profit as well, in addition to all the profit that I already made. So what's the end result of this particular position? Okay, so $2, let's see, $17.29, and plus the $25.11 there. That comes to $4,240. And then we just took a gain there of $41.38, so minus $41.38. So after all said and done, I actually took a loss of $100. Now, had I just waited another, I don't know, few hours or maybe just another day, I would have got out with probably about a $200 profit. But that $100 I can make back, you know, in one trade so simply, and I just wanted to get out because this was just a dumb trade to begin with. I really shouldn't have got into it, but I just wanted to show you the power of options there, okay? And those two losses look, you know, devastating, right? That would devastate somebody's account there. But really what you're really doing is you're just pushing off those gains down the road until the stock recovers. I'm getting safer as well. I got down $1 in strike, and I pretty much was able to get out of this stock. So they're showing me I have another loss that I actually would have to go through the database and look and see what the other loss is. So those losses aren't really, you know, it's really not something you're gonna take very often with these strategies. You know, even if you roll something, that will count as a loss, a realized loss for that particular month. That's the reason why November shows here minus 666. Even though there was actually a substantial loss in that month, guess what? It got rolled to December. That's the reason why I'm up to, you know, $6,000 in December. Okay, that's the reason why it's kind of complicated to make these videos, because people see that and they don't quite understand it, and I get it. It's not easy to understand, all right? So let's kind of talk about some of these other metrics up here as well. I've been doing a lot of puts, so the put to call ratio is about 2.3. And so there's a lot less calls there. Lately I've been doing a lot more calls just recently because I think the market is a little frothy, so I've been doing a little bit more calls recently. So if we look at my account right now, these are all the options I have on right now. This is just for the next week's expiry. And we got, let me see, call, put, And it's pretty equal, but there's quite a few calls there as well. With the last week or two, I've had a lot more calls on than I'd say puts. Some of these are strangles as well, like all these down here are strangles. So let's go back into here. So that's the put call to ratio right there. Winners 111 out of, and then we got 4 total of 115. Win percentage 96.5, loss percentage 3.4, which is a little misleading because those are just rolled options and one mistake in there. I'd have to look to see what the other one is. Exercise, we've had 0 exercise because these are not covered calls. All right, now I do have covered calls in here as well. We'll kind of just touch on those a little bit as well. Right now I have 14 positions open, and that's through the query dates up here. Total positions out of everything that I have in my records keeping here or database is actually 20. That's including the covered calls. So just looking down here, this is the options realized income. Now granted, like I said, I was not tracking anything prior to June, and I kind of started in June tracking some stuff. I've been trading options all year. It's just too hard to go back. There's some numbers that I would have to put into here that I cannot put in here. Obviously, I could get the open date and the expiration date. I could probably get the call. I could probably get the DTE, but I would not know the stock price when I opened it. I would not know the probability of the money, and those are crucial numbers that I want to know. Dividend investing is not dead. Go ahead and like and subscribe and hit that bell notification. So yes, I am trading covered calls as well. You know, and obviously those are in my dividend portfolio. So if we just query the dividend portfolio here, which is in my Schwab accounts, we've made $1,200 year to date, at least since I started tracking them. And that's pretty passive. I just put those on. Let's kind of look at some of those right now. So if we actually look at the options data here, these are all the closed options for just all of the Schwab accounts, actually just a taxable account. These are all covered calls. So I've only had one that got exercised. I made a video on that. That's the Cisco there. I just bought it back that Monday, which I later just sold anyway. But see, these are all the covered calls. So out of all of these particular options, these covered calls here, which I've been doing for months now, I'm pretty conservative, okay? Probably the money's all hang around, you know, actually if we look here back, probably the money on just these covered calls is 6%. So I'm very conservative on those particular covered calls. And I've generated about $1,200. The top traded tickers in this particular time period is Microsoft. So I've sold a lot of covered calls on Microsoft, Apple. The next one in line here is JPM. All right, Coke, Cisco, VYM. Doing a lot more on VYM. Okay, so those have continued to go up. A lot of these other ones I don't even own anymore. So I don't own Cisco anymore. I don't own Leg anymore. So I'm not doing any more options on those. So if we go back here and look at the taxable, let's switch to tax deferred account, which has got, I think I'm only doing O in that particular account. So yes, just O. So I'm doing covered calls on a realty income. And so far year to date, I've made $78. So that's not a lot, but guess what? It's free money. So looking here at the options metrics for all my options plays, at least since I started collecting the metrics here, why am I even making this video? I'm getting 24% annualized rate of return. If I sold all of my dividend stocks, $387,000 worth, I could make $93,000 a year, okay? So why am I not doing that? Why don't I just sell all those darn dividend stocks? What a freaking Joe Schmo I am for just being in dividend stocks, okay? I can make $93,000 instead of that lousy $12,000 out of the dividend stocks. And the whole reason why is because it's coma money, all right? Dividend stocks are coma money. It's gonna make money while you're sleeping. It's gonna make money while you're in coma. It's gonna make money while you're in a toe tag or body bag. So I just filtered this for this week today, literally just from December 7th to December 11th, which is today. And just this week alone, I brought in over $900 of income. So that's the reason why we're all doing this. Now, granted, that was an annualized rate of return of 16%. It's come down. I'm getting into some less riskier plays. So that is coming down a little bit. So if we're all shooting for 24%, which I think is doable pretty safely, okay, average percentage probably in the money, still 4.6%. That's fantastic, all right, for 16% return. So the average DT is still 8.5 days. I want to get that up to about 10 to 14 days and average held to about 7 to 10 days, just to make this less cumbersome, I should say. Now obviously these are the stocks that I traded this whole week. There is some pretty meme stocks there. We call them meme stocks. Spotify is not really meme stock, but we got Snow in there. Moderna's kind of risky just because of the vaccine news too. But so going forward, this is a strategy I'm going to be playing, but I'm not getting rid of my dividend stocks because I need that Coma money. I was just thinking about it today, and I was thinking if I had to rely on this income, now granted, if my account size was $388,000, I could generate a lot more money with this strategy than the dividend stocks, and even get less risky. Not saying that it's risky now with what I'm doing, but I could even get way more conservative and still generate probably double what I'm generating in my dividend income portfolio. But guess what? It's not passive. So I get it. There's a lot of information in this particular video. If you want to take a look at my last week's video on the dividend investing video, where I just hit $1,000 a month of average monthly income, go ahead and take a look at that up here. It was a pretty good milestone. So I won't be selling my dividend stocks, and I will be doing the strategy going forward. It's just supplementing my income. I enjoy doing it as well. If you have any questions, I get it. This is a lot of information packed in here. It's real confusing. It's very hard to discuss. It's very hard to talk about. But if you have any questions at all, go ahead and shoot me an email, or go ahead and hit me up on Instagram, Facebook, or Twitter, or even just leave a comment. So with that, I hope everybody has a great weekend, a great Christmas. It is a little blistery 20 degrees here. It is, light dusting of snow here in Colorado. So go ahead and like and subscribe, and we'll see you in the next video. Thanks for watching.